Hello traders, Gary Wagner here. It is Thursday, 8th day of September 2016, and this is Trending Markets. We are looking at a Dow Jones Industrial Average closing today fractionally lower, once again about 0.25%, off by 46 points to close at 18,479. Standard & Poor's again off about 0.33%, off 7 points at 2177, low 2175.75, and the high 2189.25. Lastly, in U.S. equities, we are looking at the NASDAQ, which is down almost 0.7%, 4796, down 32 points. Of course, that particular sector of U.S. equities has been really outperforming the Standard & Poor's as well as the Dow. So on down days, to see it have a larger percentage drawdown than those two markets does not surprise me. What might surprise many, though, has really been the rebound in crude oil. Crude oil up about 4% today. We'll definitely want to take a look at a couple of oil charts. 47.38, up $1.88 a barrel. It traded to a low of 45.77 and a high of 47.75. Lastly, do want to take a look at the dollar. Dollar up fractionally, 0.1%, 10% in terms of the net gain, a 95.05. That is the settlement price on the US dollar, but really an interesting chart when we look at the market through the eyes of a weekly chart, and that's this chart right here. We'll certainly, time permitting, want to take a look at a dollar chart today. In fact, let's start the show off with this dollar chart, because I do stand corrected. This is a daily dollar chart, standard candlestick format, and the candle that it formed and the way that that candle trades, I find is pretty interesting. First, we've got really the wider big picture view on this daily chart as I've compressed it to allow to take in roughly a year and a half, 2 years worth of data. And the reason that I wanted to do that is to really show this one particular area, 94 on the dollar index, that I believe should hold some potential support for the market. Although we're still trading above it, I do believe that we will see a further weakness in the market. However, today's resilient recovery, as you will see on the candlestick type and how that candle is formed, could be giving us information contrary to that basic assumption. Now, as I said, 94 is a level that I would look for should we see this market continue under pressure. Realize this has come down from about 98, came down to about 94, then came back up. And in terms of the relationship between this high here and this high here, you're looking at a 50 to 61% retracement, closer to really 50 when you consider 97 down to 94, and this being at 96 in terms of the high here. You can also see some historical data alluding to the fact that you would find resistance in this area. But let's go ahead and blow this chart up so you can see what I'm talking about this candlestick type. And so traders, here's what I'm talking about. This is that same dollar chart, but I've just kind of blown it up. And the key with this candle type right here, it is very, very close to the umbrella group of candles, which are composed of the hangman, the shooting star, the inverted hammer, and it's also very, very similar to a doji in that we still do have somewhat of a upper wick, but the key to this particular candle type is the body size in relation to the lower tail. And so what you get with something like this is simply called a hammer. And a hammer is a fairly powerful candlestick type, and it's one of the few candlestick types, meaning all of the umbrella lines in which color is not part of the composition of that candle type. So what you get is a market that has a very, very tight relationship between the open of the market here and the close of the market here. However, at some point during the trading day, traders really bid this market down tremendously. But once it hit this particular low that came in, whether it is short covering, whether it is buying the dip, whether it is the feeling that you now had a market that was undervalued, they really bid it back up, and they bid it up, in fact, above the opening price of today's market trading activity. Now, as I said, color is not as important as the length of this tail, the size of this body, and the body in relationship to the tail. In other words, to be a hammer, to hit the criteria for any of the umbrella lines, your tail has got to be at least 3 times the length of the real body. And I can certainly say that we've met that criteria here. So a very, very interesting candle. Traders, we are looking at a daily chart standard candlestick format of crude oil. And if you recall from yesterday's show, we saw this market definitively moving to higher ground, but I had removed the longer fib retracement so I could add a shorter one to kind of talk about another point. But I definitively felt it was roughly at 47 that we would probably run into some resistance at 47 in terms of the crude oil market. We've absolutely barreled through that. This is a fundamentally and rumor-driven market at this point, without a question of a doubt. 47.36, that's the closing price, up 4%, so a pretty sizable gain, but I've added one fib retracement from these lows at 39 up to 48, and you can see that we've plotted different ones. The first area is 23, then we move down, and those will be effective once we hit a top and begin to move down. But traders, we certainly haven't hit the top, and the fact that we've now traded above the 23% retracement, which comes in at 46.50, my sense is if we're going to run into resistance here in this area, it's going to be based on this cluster of activity, these price points that came in middle of last month, and with real strong resistance, of course, up at just below $49 per barrel. I don't see oil trading over $50 per barrel. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.